Hi everyone, this is the Focus Spender, and today I want to share with you my experience doing my own taxes for the second year in a row as it relates to paying business taxes and taxes on my investments. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your finances, and increasing your net worth. And if you like to follow me on social media, you can find me at Focus Spender on Facebook, Instagram, and Twitter. Now let's get started. So you may be wondering, why in the world are you doing your own taxes? Well, it's for a couple of reasons. Last year, I wanted to try it out for myself. I really like the person that I do my taxes with. He's a family friend. I've recommended him to countless amount of people, but I really wanted to learn for myself what goes into taxes and just get a better understanding of everything. Also, last year, my circumstances changed a bit. I decided to make Focus Spender an LLC so that I could separate that money from what I was earning from my job, and that I would be able to, deduct business expenses. I wanted to buy a camera. I wanted to do so many different things. And the only way to do it well was to do it as a business and to keep it separate. So I decided you need to really learn what's happening to your money. Also, while I do love my tax guy, sometimes I would look at my return and I'm like, you know what? The tax police is going to come for me. And if I'm going to be a business, I cannot have Focus Spender going to jail for tax evasion. So I needed to make sure that everything was done properly. And the only way I could do that was to do it for myself, because I have trust issues and I feel like I'm the only person that can do anything, which is definitely not true, but sometimes this is how my mind can work. So my experience last year was a little bit shaky. I ended up filing my taxes probably the 2 days before they were due. And it's not because I started late. I did start on time, but I kept getting stuck in different issues and I just didn't know what to do. So maybe a day or two before, I just sat with my computer and I was like, you have to finish it. There's no other way but to finish it. And I did. And I promised myself that I wasn't going to do it again this year. But like I said, I must like punishment. So I decided again this year, maybe if you just start earlier, you'll get everything together and then it'll work out. So even though I did not do it by the April 15th deadline, they did extend it to July 15th. And so at the very, very end of June, I was able to finish all of my taxes. I did start it in March. Once I saw that there was going to be an extension because of COVID-19, I just put it aside. And then finally, maybe a week or two prior, not even, maybe a few days prior to me filing it, I decided to pick it up again because I did not want the July 15th deadline to be on my back. So I ended up using TurboTax. I'm sure there's a lot of different tax software, but that's the one that I'm familiar with. That's the one that my tax person uses. Years ago, when I tried to do my taxes myself for the first time, that's what I used. So I decided, okay, this is what I'm going to use. It connects to QuickBooks. I use QuickBooks to track all of my business expenses. So I figured this is the best way to go. I ended up paying $230 before tax, and that's broken down between $50 for my state tax prep, $120 for the self-employed tax, and $60 for the Turbo Max benefits. So I decided to sign up for the Turbo Max benefits because I wanted to be able to talk to a CPA. I know there's other benefits to the program, but really I use it because I wanted to get that CPA review. I wanted to be able to call someone and ask them very specific questions to make sure that I was thinking about everything properly. And I'm glad I did, because the call that I had was extremely helpful. There was just certain things that I kept going over in my head, like how should I separate certain expenses? Where should I put certain income? Should I put it under my LLC? Should I put it under my personal income? What I should do? So that call was very helpful, and it was worth the $60 if nothing else. In terms of the documents that I ended up using, I needed to have my W-2, my 1099 int, my 1099 div, my 1099 miss, and my 1099B. I know that there are likely way more documents that you need, but these are the documents that I received, and I'll go through them really quickly. So the 1099 int is the document that you get from your bank when you earn interest on your bank account. So if you have a bank like Chase that's not paying you real interest, even if you do get it, it might be $1, it might be $2. So if that's the case, I wouldn't even bother downloading it and sending it to your tax person. But if you are using a bank that gives high interest, you definitely need to download that document and give it to your tax person. Then I had my 1099 div, which means dividends. So If you are using Robinhood, M1 Finance, Acorn, Betterment, Stash, any account that you have that is a non-taxable account, you will likely have a 1099 div because you might own stocks that are paying dividends. So if they're paying quarterly dividends, monthly dividends, annual dividends, you should be receiving some type of document like this. Likely you're not going to get it in the mail. You do have to do that searching out for this form. And this is one of the reasons why I wanted to do my taxes myself, because I knew I was getting documents like this, but with my tax guide, we weren't going through these types of things. You may have someone that is asking you questions like, do you have investments? Or they may assume that you don't. And so if they're assuming that you don't, they're not going to ask you for this document. If they don't ask you for the document and you don't know to download it, then you're not going to be paying taxes on this. Another thing I wanted to point out is that I always get questions from people that say, how do you withdraw your money from Robinhood and M1 Finance? And I can tell that when they're asking this question, they don't understand that to get your money out of an investment, you're selling your investment and then you are sparking a taxable event. And when you spark that taxable event, you have to pay taxes on the money that you earn in those accounts. So if you have any of the investment platforms that I mentioned, or one that I didn't mention, make sure every year after February 1st or February 15th, before you file your taxes, you are going in and you're downloading your tax documents and passing it on to your tax person. So similar to the 1099 div is the 1099B, which is for capital gains and losses. So I got this from Betterment. In my Betterment account, I have two accounts. One is my safety net account and one is my build wealth account. So I got the 1099B, I believe specifically because of my safety net account. For that account, I noticed that the weight between stocks and bonds was shifting. So instead of it being 60% bonds, 40% stocks, I noticed that over time the stocks were increasing and the bonds were lowering. And that's because I was getting dividends from the stocks and it was just becoming overweighted in stocks. So I needed to adjust. And so for them to adjust and give me more bonds than stocks, they had to sell some of my ETFs, and that sparked my capital gains. But there were some losses that offset the gains. They use a thing called tax loss harvesting, and once I feel comfortable explaining it, I will definitely do a video, but they did the tax loss harvest so that it could offset some of my gains. And so for my 1099B, I think it just showed I made $60, even though they sold a lot to rebalance my account. So the other thing I wanted to talk about was my 1099 miss, and that is for miscellaneous income. So if you are someone that happens to have a YouTube account, especially if you're new to YouTube and you have this account and you're earning money, you should be getting a 1099 miss if you earn more than $600 for the year. Also, let's say you do other odd jobs. Maybe you're a freelance worker, maybe you drive Lyft or Uber. Whatever you're doing to earn money and it's not coming in the form of a paycheck, you will be getting a 1099 miss. So I got one from YouTube. I got one from a couple of other places, and I needed to file that into my taxes. The companies that did not issue me any type of tax documents were Vanguard and Fidelity, and that's because those are my non-taxable accounts. So I have my Roth IRA with Vanguard and my traditional IRA with Fidelity. So for my Roth IRA, I'm never going to be paying taxes on that money ever again. So the money went in post-tax, and no matter how high the account grows, I never have to worry about paying taxes. However, with Fidelity, since that money did go in pre-tax, I rolled that money over from old 403Bs and I never paid taxes on it. When I retire and I start withdrawing the money, that's when I'm going to have to start reporting it on my taxes. So, would I do my taxes again? I definitely would do it again, especially if my circumstances don't change next year. It ended up being quite easy once I understood what to do properly. If you are someone that has a side business, you should be tracking your expenses and income in a program like QuickBooks so that when you do your taxes, you clearly know what income to report and what expenses to deduct. But also, what made it so simple this year was that all of my investment accounts connected directly with TurboTax. They were able to allow me to select the account that I use. So I would go in, search for Betterment. It would allow me to put in a user ID and password or whatever code that Betterment was going to give to let me connect the accounts, and then it would pull the information directly. And then for those accounts where you couldn't do that, TurboTax asked me for my account number and then a document ID. So every document had a unique document ID, and then it would just pull the information automatically. So it was very, very simple to do. And so I definitely think I'll do it again next year. However, once I get married, I definitely have to think about filing jointly, filing separately. And that is something that I would talk to a CPA before I even start the year, so that I can set up my W-4s correctly and make a decision on, is it now getting too complicated for me to do myself, or should I just let a professional handle it? If you have a pretty simple income structure, there's no reason why you shouldn't do it yourself. And I would say that even if you don't want to do it yourself going like for the long term, at least go through the process for yourself, because you can do that part for free. And once you see what it looks like, you can make a decision. Should I file myself, or should I pass it on to someone else? I just wanted to share with you what my experience was doing my taxes myself. I also wanted to talk to you about investment taxes, because that's something that I feel like I'm not hearing enough of. If you are investing, it's something that you have to think about and have to report when you do your taxes. I hope you like this video. Be sure to click on the next video that's popping up, and I will see you next time. Thanks. Bye-bye.